Welcome back. Great to have you with us on Primetime Business News. Now, South Africa's sovereign credit rating is under threat after a downgrade last week, Friday. That could have repercussions across the economy. Tonight, we're looking at the health of the banking sector after credit rating agency Moody's released its 2016 outlook for banking across Africa. Moody's says the outlook for banks across the continent remains stable. That's despite some risks like slowing economic growth here in South Africa, currency depreciation, we know all about that, as well as capital outflows. Moody says risk management and supervision capabilities are developing well in the banking sector. Systems in some countries are vulnerable, however, as they are hit by lower oil prices. Ghana, Nigeria, and Angola among those vulnerable countries. Well, South Africa's credit rating, of course, under threat. So let's talk about our own banks. Let's start there. We're joined on the line by Moody's Senior Credit Officer, Constantinos Kypreos. Constantinos, thank you for joining us. Overall, you say the outlook's stable in Africa, some threats, but let's focus on our banks. Commended throughout this report, and we often pat ourselves on the back for having a very strong banking system here in South Africa. There was concern after African Bank fell, but are we back up there again in terms of rating and outlook?
I would say that the stable outlook we have on South African banks actually balances the rising credit risk that are stemming from the difficult economic environment against solid capital buffers, resilient profitability, and as you've mentioned, good risk management and effective supervision. So there are challenges facing the system. So the electricity supply disruptions, the weak consumer spending, the low investments is having an impact on economic growth, where Moody's project to grow by just under 2% in 2016. We think this will have an impact on asset quality metrics of South African banks, especially on the retail lending side, where rising interest rates, rising inflation will affect the affordability. But at the same time, we do acknowledge that banks have certain buffers. As I've mentioned, the capital that they hold is well above the minimum requirement. And their earnings capacity, their profitability does remain resilient. Because we believe that the banks are in a position to absorb the higher, potentially higher credit losses that will come as a result of the deterioration in asset quality.
Konstantinos, for lay people, one of the things you're concerned about is currency weakness, very important for us in South Africa. Just explain how that can affect our banks.
For South African banks, the impact of a weak rand is muted. I think this mostly affects other banking systems in the continent, where, for example, banks have a significant proportion of their lending done in foreign currency, in dollars. So if the local currency depreciates, it means that the person who borrows the money will find it more difficult to repay because in local currency terms the amount increases. Now, this is less of an issue in South Africa, as I said, because the banks lend primarily in rand, so they are not directly affected by rand weakness. Any impact will be indirect via the impact on the economy. For example, weaker rand may imply rising import prices, which affect inflation, and higher inflation may lead to higher interest rates, which, for example, affects the affordability of retail lending, and that's the indirect impact on the banks.
All right, Constantinos, thank you so much for your time. Unfortunately, we're out of time. We'll keep following all credit rating-related matters. Of course, a lot of jitters after Fitch downgraded us. As you heard there, our banks are looking in quite good shape for now. That's a wrap for now.